Hi, good day to all. This is Calvin here. So I wish you all a very great, happy New Year. I hope that you guys has a great break in the last week. So yes, as usual, we will kickstart this year with our latest weekly technical outlook, the very first for 2022, for the week of 3rd Jan to 7th of January. As usual, the major stock indices, S&P 500, NASDAQ 100, the Hong Kong 50, Japan 225, and the German 40 indices. So before we start, let's take a quick look at the disclaimer slides first. All right. So yes, so during the last week of December, where liquidity tends to be quite low, let's take a quick recap on the raw momentum analysis across the globe of the major stock indices. So what we could see, definitely the S&P 500 powered to all-time high, together with the Dow Jones Industrial, with the Dow Jones Industrial Average. So the outperformance came from the Dow Jones Industrial Average 1.08%. Then almost unchanged for the NASDAQ 100 and 0.86% on the SPX, the S&P 500, and also very slightly minor gain on the small cap Russell 2000. So what you could see over here is a bit of, I call it, a slight underperformance versus its prior week. As you all know that the last week of the year tends to be lower trading volume. Okay, so do not take into that how's it? I will not take into these values into significance in terms when you try to gauge. Okay, so what's important over here will be the this week and the week after, where trading volume tends to get normalized. All right. So what's interesting over here is we start to see a turnaround or from the Hong Kong or the China related stock indices, the Hang Seng Index, the Hang Seng Tech Index. As you all know that the in the story of 21, they have been underperforming due to clampdowns on the China big tech stock, as well as a very reluctant, we call it stance by the central government authority to actually withhold physical stimulus, both from the physical side and the monetary side, to actually enhance growth in the China economy. They are more kind of concerned about their deleveraging stance to actually try to reduce the amount of bad debt or the risk of further potential bad debt in the China property sector. So yes, so a bit of turnaround towards the last 2 days of the year during in fact it was the last day of the year where actually most of the rally actually took place for the Hang Seng Index, the Hang Seng Tech Index, right? They're almost unchanged for the Nikkei 225 and the German 40 index over here. So very quickly, right, I want to take a look at last week weekly performance or across the board of the 11 SPX sectors. So almost all in green, except for the communication service, which has a minor loss of negative 0.79%. And what I want to show you is the annual performance over here. So this annual performance, it's the whole of 2021. So it's the first time in history in the SPX 500 history that all sectors posted double-digit gains. So that's a very first, very, very remarkable feat over here. Okay, so all of them post double-digit gains. So the top performer will be definitely related to the commodities sector, which is the commodities market as a whole. That means inclusive of base metal, oil, we call it soft commodity, energy. The energy sector definitely has a kind of a direct correlation with the oil price ratio, so surge close to 50% for the whole year of 2021, the annual return. So 47.7%. So not too bad for the technology sector, which also consists of big tech stocks, US big tech stocks, 33.35%. So what we could see is pretty remarkable against across the board, both from the energy, which is considered as a value play, at the cyclical play. Big tech considered as growth over here. Uh, Certain more of a high value growth stock. We're talking about those growth stocks that are less profitable stocks. That means we're talking about growth stocks that have less lower profitability in terms in their income statement and very weak balance sheet actually underperform. One example will be ARC itself. Yeah. So if you look at the rest of the cyclicals, not too bad for the financials, materials, as well as the consumer discretionary, all posting double-digit gains, as well as the industrials as well, 19.4%. Okay, so now if we stretch across the globe over here, so I break down Q1, Q2, Q3, Q4, and as well as the total year return. All these are net return, excluding dividends. than inclusive of the prior 2 years, 2020 and 2019. So what we could see is a very strong performance on the US stock market. So the SPX posted double-digit gains in the last 3 years, okay, consecutive 3 years. Similar for the NASDAQ, which tends to be almost the same, 26.63%, SPX 26.89%. But if you add all the gains over here, is that the NASDAQ 100 posted much higher compared to the S&P 500. So then the one that is underperformed definitely be the Hang Seng Index, and worst performer be the Hang Seng Tech Index. So I want to take note that look at the prior 2 year of outperformance against the rest of the world. Then suddenly just lead to what I call a dismal return on for 2021. So all these are actually kind of a engineered, sorry, engineered by this central government to actually clamp down on their China big tech stocks due to we call it inappropriate business practices according to the CCP, which is the Chinese Communist Party. Okay, so the next question we'll ask ourselves that can this performance, strong performance, especially in the US stock market over here, continue into 2022? So that will be another discussion for my Q1 quarterly outlook, Q1 2022 quarterly outlook, which is out which I'll be hosting on the 26th of Jan this year. So keep a lookout for the dates and the timing on that. I'll post in my Twitter feed, my social media. So later I'll share you how to actually obtain my social media, where I actually post daily commentary on the market. So to give you guys a head start of what's going on that is driving the markets at the moment in time. All right, so now this particular video is more concerned about the short-term potential performance, which is the weekly performance. So we'll be looking at more short-term technical picture of the indices that I'd like to cover for you all. So before we jump start, is that one index, definitely the SPX 500 will be the important index, will be the big brother among the big brother in the world, yeah, that is actually outperforming this year, last year, and as well as the one that is still making fresh all-time high, total about 70 all-time high, 70 all-time high in 2021. So this relation, which I previously plotted over here, is that where the SPX found a kind of a medium-term bottom in 3rd of December, it corresponds to the VIX index hitting a key resistance at 32.32 level. All right, then thereafter the SPX is going to churn higher and the VIX is going to push down. So take this VIX as a contrarian opinion indicator. A higher level of VIX relatively in the past, if it's hit a key resistance level, this is where we reach an extreme relatively fear in the market where people are get too fearful, which will eventually lead to a potential medium-term bottom in the SPX where it could start to shape a further rally, which is the okay after 3rd of December. Then if the market keep on rallying over here, the VIX will start to turn downwards. That means we're talking about lower implied volatility in the market, which is actually telling us that the market participants are getting complacent. That means they're getting we call it more risk loving. Yes, it's good to be risk loving, but if we start to reach to the stage of extreme relative risk loving, we've got to be very careful because it's a contrarian opinion indicator. If everybody starts to be too bullish, this is where there's a risk of a corrective pullback. So pullback in terms of medium term, based on the chart that I'm looking over here, multi-week pullback. So what we could see, the VIX still has room to actually hit a key support level at 14.2 so far. Okay, 14.2. So it's definitely VIX last trade based on the 31st of December, which was last Friday, is at 70.22. So there's still some more room to push down further to hit before it actually retest 14.2 level. So i.e. what it means that over here, there's still further potential upside on the SPX, okay, 500, given the past relationship on the SPX 500 in relationship with the movement of the, so sorry, it's a bit sensitive, in relationship with the movement of the implied volts, which is the VIX, okay, the VIX index. So now let's quickly now jump into the technical picture that I will share with you all for this week, all right, for the major stock indices. Okay, so let us start with the SPX first. So as I mentioned earlier, the SPX managed to hit fresh all-time high. All right, let me highlight. Okay, reached a fresh all-time high on 30th of December, which is 4808. Okay, so if you look at the daily chart over here, SPX over here, what you could see is that there's no signs of what I call a major topping formation. Price action going to shape higher high above the 50-day moving average, which is now acting as a support at around at 5660 level. And I want to take a look at the momentum, the momentum as depicted by the daily RSI. So you could see that this daily RSI managed to shape a breakout from a former significant descending resistance, retested close to it and inch much higher on the last closing day of the year, which is 31st of December. So what it means that based on this observation in terms of the momentum, the daily momentum, that means we talk about medium-term momentum of the SPX. We talk about the multi-week. That means, i.e., what we could see over here is that there could be further potential upside supported by positive momentum without any clear signs of a major topping formation. That means, i.e., in terms of the Elliott wave configuration or fractal analysis, we are now doing a major wave 5, an impending potential major wave 5 of a circular, a numeric wave 5, that is the long-term circular trend over here. All right, so those who recall is that there's one particular article, or even in my 2022 annual report that I will publish based on our team of CMC analysts, we got to be mindful in 2022. Why? Because the SPX is actually undergoing a circular wave 5, numeric 5 up move. That means, i.e., it could be the potential end of this 13-year of bullish cycle that was started since March 2009. All right. So just got to be mindful once it hit that certain level. So right now, that key level hasn't been reached yet. Okay, so now, so in the shorter term, that means we're now concerned about the weekly basis. It could still move further higher. Yeah, even though some could actually explain to us that we could be in an irrational state of up move. Yeah, even though it's irrational, we got to respect this irrationality. Just we got to do our own more prudent risk management when we trade when we trade into such irrational uptrend move that is actually depicting right now. Why is irrational? Because number one, very clearly that we are still facing higher inflationary environment. A higher inflationary environment might lead to higher cost for business, which we could see downward revision of optimism in terms of optimism in profit growth based on analyst estimate. And also in terms of liquidity, it's not supportive this year. Why? Because the Fed has made very clear that it's now in hiking mode. Okay, and base case scenario, they will actually hike 3 times in 2022 based on the previous FOMC meeting. Okay, so that's more for discussion of another day. Okay, so that's the reason we are in a kind of irrational up move right now. But irrational up move, we still got to respect its trend until it ends. So at the moment now, this irrational uptrend hasn't ended yet. So we got to just respect it over here. All right. So what we could see over here is definitely uh, a kind of a wave 3 in progress of the bracket 5. Okay, over here. So what we could see that SPX last week we have upper limit boundary. So we are looking at a push up to upper limit boundary at 4744, which has already clearly taken out and hit the first resistance of 4780, 4800 level. Okay, right exactly at that level because the all-time high is 4008. Okay, for 4800 level. Okay, pardon me. So what you could see over here is that I would have a key medium term, because I don't want to tighten the key medium term pivotal supports to this former we call it a minor breakout level now turns into a pullback support, which is 4744 slash 4710 level. So I'll give you a bit of, so this, take this as an intermediate support pullback level, but the key support to watch for this week will be 4608. So what's 4608? 4608 is actually the lower boundary of this medium-term ascending channel that I drew from the October low, 1st October 2021 low over here. And also, if I were to draw a feeble retracement of the low of the wave 2, 20th of December low, all the way up to the current all-time high that was seen on last Thursday, is at close to 61.8% and 76.4%, which is at 4008 level. 4608 level. So as long as 4608 level holds for this week over here, we could see further potential upside to make further all-time highs towards 4830 slash 4860, then thereafter followed by 4887. And a break above 4887 should take us even higher to 4950 slash 4970, which is close to the upper boundary of this medium-term ascending channel and the 1.618 FIBO expansion level drawn from the low of 4th of projected from the low of 4th of December. All right, RSI in the shorter term, RSI, the 4-hour RSI still remains positive. inching up above the 50% neutrality level. But however, if we start to see a bearish breakdown, which is a 4-hour close below 46.08, the SPX could actually take us down towards the 4th of December swing low, which is 44.90 slash 44 44.65 level. All right. So now, next will be the NASDAQ 100, which consists of the higher weightage towards the big tech, the US big tech stock, as well as Tesla itself. So on the daily chart over here, yeah, even though it did make all-time high above 16,770, what we could see is that technicals has starts to improve as well. Why? Because if you could look at the it's been trading above the 50-day moving average since the reintegration above it on 22nd of December, and as well as break above this, we call it medium-term descending trendline resistance former that actually drew from the all-time high on 22nd of November, a bullish breakout for it. And now the pullback support is coming at 15,980, which is also close to the 50-day moving average over here. Then all in all, the daily RSI continues to shape higher low above this support level that I drew, this significant ascending support level that I drew, and as well as above the 50% neutrality level. So shaping higher low. So indicating to us that upside momentum in terms of from a medium term perspective has started to resurface, which is actually supporting kind of a medium term further potential up move on the Nasdaq 100, pardon me. Okay, so now if you look at the levels or the potential levels to watch for this week, I'll be using is bullish. We have a bullish bias for this week on the Nasdaq 100. Why? Because of the positive daily elements that I share with you all. So using 59.60 as my key medium term pivotal support to support this week bullish move. Okay, so what's 59,960 will be very close to the 59.80 pullback support that I share with you all on the daily chart here. We're so close to the 50-day MA. And to be exact, 59.60, right, is actually the feeble retracement that I draw from the low of wave 2, which is the low of 20th September, towards 28th of December high, which is 61.8%, right exactly at that level, and confluence closely with the upper boundary of this medium-term ascending channel that I drew for 4th of October low from here. So as long as this level holds, we may start to see further upside to retest 16,770, which is the all-time high level. Then further push up towards the next resistance at 17,020 slash 17,030, which is the 1.618 feeble projection taken from the low of 4th of December to the high of 16th of December, projected it from the low of 20th of December. And also the 4-hour RSI also starts to inch up above this ascending support level, which actually start to pose a bullish divergence on the 20th of December from here. And now it start to shape up from this level, this ascending trendline support as well, and about to break above the 50% neutrality level. So indicating to us that short-term momentum is also positive on the Nasdaq 100. That is actually supporting further potential up move as long as 15,960 holds. So, however, if we start to see a breakdown below 15,960, that means a 4-hour close below 15,960, all bets are off for this bullish bias view, where we could start to see another tumble down to retest the recent low of 4th of December to 20th of December, which is at 15,540 slash 15,000 to 90, which is the 61.8%, pardon me, which is the 61.8% retracement from the last swing up of 4th of October to the all-time high of 22nd of November over here, 61.8%. Okay, now back to the Hong Kong 50 index. So the Hong Kong 50 index is a bit tricky right now. Why? Because if you look at the weekly chart over here, they managed to survive this 23,000 key support level, okay, key neutrality level. They managed to survive this level. Okay, but at this point in time over here is that we start to see technicals is a bit mixed right now. The RSI seems the 4-hour RSI seems to be being rejected off close to this former swing high, the former resistance over here seems to be rejected from here. But however, if you look at the way the past price action behavior in the last swing low of 1st of December and 20th of December, this last two swing lower low, I would say obvious lower low, the RSI is not shaping a lower low. Instead, the RSI is shaping a higher low. You see the higher low. So what it means that A bullish divergence has really started to form on the 4-hour RSI, indicating to us that this short-term downside momentum is actually losing strength. But however, because of the mixed elements that we see that's depicted on the Hong Kong 50, you rather turn neutral now between the upper boundary of 23,800, okay, which was the previous, we call it a failure breakout from this level. Then thereafter, it reintegrate back below 23,800 and shape this 2021 year to date low, which is at 22,660 from that. So we turn neutral between these two levels, 23,800 and 22,660. So unless we have a 4-hour close above 23,800, that will validate a further potential push up, at least a corrective rebound up towards 24,450. A break above should take us up towards 25,800, which is this descending trend line support that descending trend line resistance that is still in place since 11th of August 2021 high. So from a longer term perspective, right, if I zoom out from the 52-week high of current 52-week of the 18th of Feb high, it's been trading inside this very we call it complex expanding wedge configuration over here at this point in time. So in order to see what I call a substantial recovery, it got to stage a breakout above 26,630 level, which is also the swing high area of 11th of August 2021, and as well as this upper boundary of this expanding wedge configuration that is complex expanding wedge configuration that is in place since 18th of Feb 2021 high. So for now, turning neutral on the Hong Kong 50 index due to mixed elements. Okay, then now moving on next to the other major Asia indices that I'll share for you all will be the Nikkei 225 or the Japan 225 we call in our platform. So for the Japan 225, right, while it's running, right, if you could recall, it's trading in a very in a this symmetrical triangle configuration that is in place since February high. Okay, it's a bit slow right now the question. Okay, let's zoom here. So this 16th of February 2021 high, 13,716. Uh, September it retests again but failed to do a breakout and price action starts to trade sideways in a symmetrical triangle configuration. And last week, right, prior to the Christmas or the Christmas break, where I was leave the Nikkei 225 is we have an upside potential target which is 29,450. So has almost reached that level last week. Last week printed a high of 29,165 level. Okay, so more or less coming very close to this upper boundary of this symmetrical triangle resistance. Okay, so for this week's strategy, right, we have a return to a bearish bias, but bearish bias within this symmetrical triangle range. That means I'm not trying to play beyond this symmetrical triangle range. Because in terms of the risk-reward ratio, we found that it's quite attractive right now to actually have a bearish bias because it's now trading very close to the upper limit of the range, the symmetrical triangle range at 29,360. So we added a slight excess above this 29,360 based on this FIBO, we call it a confluence level, which is firstly number one, the retracement from the last swing for the last push down, okay, which is at if I were to observe it, oops, 16th of November high to 20th of November low, which is 76.4% level as well. Then if I were to do a FIBO expansion from the low of 30th of November towards last week rally, is actually one time, okay, one time FIBO projection. So you see a clear confluence of FIBO, we call it levels at the 29,600 level. So this will be my access level for that actually I have for my medium-term pivotal support, medium-term pivotal resistance for this week to actually keep this potential bearish bias intact to see a potential push down within this symmetrical triangle range to retest the support level right now. The support level of this symmetrical triangle range is at 27,800, which is also correspond to the last swing low of 20th of December last year. So as long as 29,600 holds, we're still expecting a kind of a minor push down towards the 27,800 level, which is the symmetrical triangle range support level. Then after hitting this level again, thereafter likely would usually flip back to a bullish bias. So RSI is also supporting this further potential push down within this triangle range as it start to shape a series of lower high below this significant descending resistance that is in place since the last overbought level or overbought reading since on 16th of December. But however, a 4-hour breakout above 29,600 will actually invalidate this bearish bias view to see a further push up to retest the February and September a major swing high area at 30,716 slash 30,870. Okay, so now going to the key European stock indices, which is the German 40 index. If you still recall that German 40, we are actually neutral last week, below a new and last neutral the week before last week. That means on the week of the before last week where I went on leave. 15,860 was taken out last week very clearly. So to see a high of 15,974. Okay, and also the price action of the German 40 index managed to actually reintegrate back above the 100-day moving average and 200-day moving average, which is now I think at a support level at around 15,620 as well. And take note of the RSI. RSI start to shape a series of higher high and higher low, and right now is hovering above the 50% neutrality level. So indicating to us that upside momentum in the medium term has started to resurface as well on the German 40 index, which is actually supporting further potential up move, okay, to shape higher high. Okay, now what's in store for this week for the German 40 is we will actually turn bullish for this week since it managed to stage a clear breakout above 15,860. So I will use 15,620 as my pullback support level, which is also that level between the 100-day moving average and 200-day moving average that we highlighted on the daily chart over here. Okay, and also if we go down in fractals term, the 4-hour is actually the pullback support of this minor trendline resistance now turns into a pullback support at 15,620. Then definitely I will give a bit of access below for the key medium term pivotal support level, which is the 61.8% Fibo retracement of the last push up, the low of 20th of December to last week high. All right, which is at 61.8%. So as long as this 15,400 level holds, we may start to see a further push up to retest the all-time high area at 16,300 slash 16,370. So what's 16,370 is the 1.382 Fibo projection projected from the low of 30th of November to the high of 8th of December, the last swing up, projected to the last swing low of 20th of December, which is very close to the all-time high 16,300. So 16,300 slash 16,370 will be the first resistance level to watch in this week bullish bias view on the German 40 index. So a break above this level should take us up higher to a fresh all-time high at 16,590, which is the 1.618 Fibo projection level. Okay, then RSI on the shorter term seems pretty healthy as well. It starts to inch upward above the 50% neutrality level. Okay, so all in all, a quick recap is over here is that we now has a potential bullish bias view across the board for all indices, except for the Hong Kong 50, which still has a slight mixed elements. So we'll be more cautious to actually have a neutral view right now on the Hong Kong 50 first on for this week, coming week. So have a great trading week ahead, and I see you all next in my next video.